Well, welcome. It's been a really big week in the news for banking. We've seen Silicon Valley Bank get handed over to the care of US regulators after they're found to be mismanaging their interest rate risk on their deposits and longer dated assets. We saw Signature Bank get taken over also by the regulators, and there's debate around whether they actually needed to do that. Was there political interference in taking down Signature Bank? On the board of directors, one of the person who was responsible for the Dodd-Frank Act to help take away some of the risk within banking, actually said that they were solvent, so they didn't need the regulators to come in and take over. And finally, we have $30 billion in deposits flowing into First Republic Bank, and those deposits are essentially guaranteed by the big banking organizations in the United States. Overarching all this is you've got a Federal Reserve who's been raising interest rates very aggressively, and they started raising way too late, in my opinion. And now it's caused all the stress on the banking system. There's huge write-down losses on, these government securities and other debt securities which were issued during the low interest rate environment. And now we're starting to see stress in the market because of that. So one of the things the federal government in the States has done is come out and tried to assure investors that there won't be any future insecurities regarding their deposits placed with banks in the United States. So what does this mean? Well, it essentially means that the US government is going to have to start guaranteeing and pumping liquidity into the markets to guarantee everyone's deposits, which I believe are only insured up to about $250,000 per account per person. So although you have the Fed tightening rates aggressively on one hand to control inflation, on the other hand, you've got them being willing to print trillions of dollars in funding to secure our deposits, well, US deposit holders, which actually reduces their value if they are going and printing $2 trillion worth of money. Now, I think there's going to be some winners from this disruption in the banking markets. Yes, the bigger banks are probably going to get more of a share of the deposit market from retail investors and institutional investors as well. I also think you can't ignore the benefits of Bitcoin and its fixed supply of 21 million. So there's not going to be a central government to go and print more Bitcoin. There's only 21 million. And then also, if you move over to Ethereum and the other blockchains, Ethereum was the blockchain which created smart contracts. And this removed the need to trust another party. So if you're entering into a smart contract with another party, you don't have to worry about whether they're going to honor that contract, because the smart contract, if it's coded correctly, will auto-execute. So you don't have to worry about whether you have an excess of $250,000. If you're due to receive back $300,000 from the other party on decentralized finance smart contract, then you're going to receive that back. You only have to trust the code. Okay, so what I want to talk to you about today, that was my preamble. I want to talk to you about something that happened in Australia. Well, not just Australia, but the head office is in Australia. So the National Australia Bank, they say they executed the world's first cross-border stablecoin transaction powered by Fireblocks. Now, I think this is a little bit misleading because stablecoins have been in existence for some time now. But this is probably the first large financial institution to engage in cross-border stablecoin transactions. So we're going to dive into this news release right now. So it says here that NAB has completed an intra-bank cross-border transaction. So intra-bank just means within the bank itself. So there's no third party involved. It's not the National Australia Bank versus JP Morgan. It's the National Australia Bank in Australia, say, with the National Australia Bank branch in London. So it's cross-border. Cross-border just means between one country and another. So let's say Australia and the UK. And they're saying it represents a world first by a major financial institution on a layer one public blockchain, which is Ethereum. So yeah, this is the thing that they're highlighting now. It's the major financial institution that it's a big deal. So why is this a big deal? Well, I think the general regulatory view of crypto, perhaps not in the UK, but there's a lot of skepticism around it. There's a lot of risk around it, and regulators are very wary about, organizations which they regulate getting involved in crypto. But what I think this highlights is that you have a major financial institution, one of the world's biggest banks, and they see the benefit of cryptographic technology, so blockchain technology. And this is an organization which has been managing payments for retail, mums and dads, individuals, but then also large corporate institutions for decades, probably more than 100 years. But yet they see the benefit of using cryptographic technology, so blockchain technology. And not only that, but they're using the Ethereum blockchain, which is a public blockchain. And it says layer one, which just means it's the primary blockchain. There's no layer two blockchains they use, which I believe JP Morgan used when they did their transaction in Singapore some months ago. So if we keep going down in the news press, they're saying it's a pilot transaction. Pilot just means it's new. They're just testing it, really, real world test. And they're deploying stablecoin smart contracts. So Ethereum was the first blockchain to introduce smart contracts, I believe. So Vitalik introduced that. And they're using 7 major global currencies: Aussie dollar, Kiwi dollar, Singapore dollar, US dollar, euro, yen, and British pound sterling. Okay, so they're calling this transaction a success. So it worked how they expected it to work. Now, this is quite remarkable. So they're saying that this transaction demonstrated a broader potential to cut cross-border transactions from days to minutes. Okay, so basically instantaneous settlement from anywhere in the world. You can settle instantaneously on a blockchain using this tokenized asset, which they call a stablecoin. Now, they have these different currencies here. A stablecoin is meant to mirror each of these particular currencies. So there'd be one for Aussie, one for Kiwi, one for Sing. And essentially, the way it works is that you would go and give, if just say you wanted to buy an Australian dollar stablecoin, whoever's issuing that stablecoin, we'll get into the blockchain terms in a minute, whoever issues that stablecoin, let's say you want $100 Australian dollars worth of the stablecoin, you would go and give 100 Australian dollars to the issuer, and then they would mint you 100 stablecoin dollars in Aussie. So that's the way it works. So big win for crypto, I think. It just shows that although banks are probably not taking large chunks of Bitcoin and other cryptocurrencies on their balance sheet because they're very volatile and it's very punitive from a risk weighting perspective for capital, they do see the benefit of the technology and they are using it. Just remarkable, I think, that an organization like this is using cryptographic technology. Okay, what else do I like about this? Well, this is an announcement from the EGM of markets. So markets, that's essentially the trading floor. So head of the sales and traders sitting on the trading floor. So I don't know, I don't have any inside knowledge of this, but I imagine that NAB probably sees stablecoins as similar to financial instruments, although they're not, from an accounting definition, known as that. But they probably see it as just another currency, and they're aware of the risks around trading and settling currencies. So perhaps they've thought that the best place to control their stable coins is within the trading floor or markets environment. Okay, so disrupting the world of cross-border transactions with stablecoins. Okay, so they're saying here, by leveraging Fireblocks as well as Blockfold. Now, Fireblocks is basically a third-party entity which helps you manage your digital assets, the custody of them, and also payments. So if you recall the collapse of Celsius, one of the things that Celsius suffered from was numerous operational losses. And one of those losses was the loss of, I think, 34,000 Ether, 34,000 Ether, so somewhere around $70 million. And what happened to them was that they'd staked that Ether with a third-party provider called Stakehound, and Stakehound lost access to their digital wallet, so couldn't return those 34,000 Ether to Celsius. Now, Stakehound blamed Fireblocks. They're also using Fireblocks, but Fireblocks said that, we never had access to your digital wallet. So I think this highlights two things. Number one is, the bank takes custody of their digital assets very seriously. So they're leaning on a subject matter expert, so Fireblocks, to help them custody and safeguard their assets, and also to help manage the payments. I'm not going to go through how that's actually done in this video, but I think Fireblocks is probably one of the biggest custody and payment services in cryptocurrency world. Blockfolder, I believe they're a smart contract provider, so they would have helped write the smart contract to execute this transaction on the Ethereum blockchain. Okay, so they make use of some terms here. So it says, NAB was able to strategically manage the entire life cycle for building and deploying stablecoins, from smart contract creation. So we've already touched upon that. So smart contract is a permissionless contract where you don't have to rely on the other party that you've traded with. As long as the code's okay, it will auto execute. So it takes away counterparty risk from that perspective. And it says creation to securely minting and burning its stablecoin. So minting just means, you have central banks which mint new coins, new paper. It's the same thing. They're basically issuing the new stablecoin. And burning just means, if you think that old notes get returned to the central bank, they go out and get destroyed or burnt, and it's the same with the stablecoin. So they get created, and then they get burnt at the end of the transaction. Okay. All right. So NAB, again, talking up the benefits of crypto and blockchain technology, saying we believe that elements of the future of finance will be blockchain enabled. Already witnessed rapid change in the tokenization market. Okay. So there's a lot of people talking about the tokenization of assets. So they also are aligned with just seeing more and more real world assets, whether they're bonds or stocks, being tokenized. And what that means is there's a digital form or digital version of that particular asset, which can be traded on blockchain. So again, have faster, cheaper settlements. Okay, they're highlighting here that they're not cowboys. So it says the stringent governance frameworks we have in place ensures we can support the creation of safe and reliable digital finance systems. So this sentence here just really talks to the fact that they know that entering into a new product, a new market, contains risks, especially cryptocurrencies. It's very, very risky, especially from a technology point of view and a market price point of view. So they're saying here that, look, we know there's risks involved with, they would have put this through a new product governance committee to make sure all the stakeholders would be ready to engage in this transaction. So they're saying that they've got appropriate governance frameworks in place. They're not cowboys. Okay, so the name of the stablecoin is listed here. It's AUDN. So some of the biggest stablecoins in the world, USDT and USDC, and they've got different issuers. They're saying this stablecoin is fully backed 1-for-1 with the Australian dollar. Now, fully backed can mean multiple things. So stablecoins that are currently in issue may not have, the US dollar stablecoins currently in issue may not have US dollars sitting in a bank account which support them. To earn a better yield and to earn a return for the company issuing the stablecoin, they may go out and buy US dollar commercial paper, US dollar bonds. So they'll spread their risk across a number of different asset classes to achieve a better yield. It says that the bank's ambition into the world of digital assets and future customer offerings, starting with its corporate and institutional clients. So this is not they're not viewing this as to support retail customers at the moment. It's just going to be corporate and institutional. In addition to transacting on a public permissionless, so permissionless, smart contract that auto executes, the layer 1 blockchain allows for greater transparency, accessibility, and scalability. Public blockchains, you can look at the data. Anyone can look at the data. For Ethereum, you go to etherscan.io, and I've looked up this token called NAB stablecoin, AUDN. And what we can see here is some transaction data. You can see some transaction data. So on this transaction data, we can see that they've been doing some test transactions for a few months, 97 days ago. And they've also been doing some transactions more recently. So there's one here from 4 days ago. And there's different types of transactions which are taking place, but I want to first go from left to right. So here just refers to, this is a cryptographic hash. This refers to the transaction identifier, the transaction that's taken place. This one here, the method, so we have burn, transfer, mint. So mint, we've already assessed that this means the issuing of a stablecoin token. Transfer means transferring it from your wallet to another wallet, so party A to party B. And then burn means, burning it, removing it from its stablecoin from existence. So this is the transaction reference. This is what's happened. This is the age. Now this here, this is a public address or public key. So this is the wallet which basically is sending or executing the transaction. So if we go down here to minting, this is where the stablecoin first gets created, and it ends up in this wallet here. At the end of the day, when the stablecoin gets burnt, it goes from this wallet here to nothing at all because it no longer exists. Now you can see when transfers take place, it's going from one wallet to another, so the public key. And there's another piece of information which is not kept on Etherscan, and that's the private key. So that's the credentials which you need to use to access your wallet and to sign transactions. So this is just the quantity over here, the number of stablecoins. So I think that's useful to see that although regulators are against using public blockchains, it's fully transparent. You can see everything that's going on, unlike the traditional banking system. So that's just a summary of the NAB stablecoin transaction. I think it's exciting that a large financial institution sees the benefit of blockchain technology, despite the issues that occurred in 2022 with the cryptocurrency industry. Hedge funds, centralized finance providers, exchanges collapsed. There's a lot of fraud and scams, and yet big players in the financial institution market see the benefits of cryptocurrency technology or cryptographic technology, namely faster and cheaper settlements. So if you don't know much about blockchain technology or cryptocurrencies, I'd suggest just start watching some videos, learn a little bit about it as you go, because over time we're going to see more and more financial assets and liabilities be tokenized and traded and settled on blockchain technology. That's all from me. Have a great week.